Hi everyone and welcome to today's More Report on Monday the 15th of February with me, Rich Perry, market analyst at Handtech Markets. A big recovery in investment sentiment over the starting period of the trading on Monday. We've seen that being driven through equity markets, sharp rally through the European session. The equities in Japan were hugely high, 7% higher on the day for the Nikkei. Now, considering you just had also Japanese GDP for Q4 coming in at minus 1.4%, which was worse than expected, this is a really huge number. Obviously, just reflects the volatility and also probably the expectation that the market is about to get some, or we're about to get some sort of significant Bank of Japan easing measures to try and weaken the yen as well. So we've seen that move through the markets and also European equities higher as well. Now, you've also had today the Chinese trade data out. Now, the Chinese trade data has come in again worse than expected. Imports and exports both falling double-digit percentages in dollar terms. Minus 11.2% on exports, minus 18.8% on imports. So a huge disappointment, you'd even argue there. But still, the markets have sort of gone with a risk recovery. Really, you've got oil price, which is higher. Let me just show you how these markets have started. This is the dollar. The dollar is unwound because we've got the euro, which is weaker, the yen, which is weaker, and that is helping to support the dollar. Interesting that that's happening, but still, despite this dollar strength, we are still getting improved risk sentiment through the commodity currencies, the Aussie dollar, Kiwi dollar, and also the Canadian loonie, all stronger today. And that's been helped by the oil price, which is maintaining its sharp rebound that it got on Friday. The move higher continues on the recovery. It's still within the downtrend. However, you'd say that at the moment the near-term perspective is looking far more positive. Now, Treasury markets are closed today because it's President's Day in the States, so we're not getting a lead from the US in the afternoon, but still at the moment we've got sharp gains on the European markets, and there's not a great deal that you can imagine that will sort of derail this recovery that we've got today, so it looks pretty solid at the moment. Now, my chart of the day is silver because we've had this that's the hourly chart. Let's look at the daily chart. Silver has been on that huge run higher along with gold price. Big run from 1371 up to 1595. Huge rally in just a matter of 5 weeks, 4 or 5 weeks. However, the reversal sign has come through today. We've got a sharp downside move. Already more than retraced 23.6% of the rally. And you now begin to see momentum signals turning lower. You've got an RSI crossover sell signal, cross below 70 sell signal. You've got the stochastics, which are now starting to fall away, crossing lower. You're not on the brink of a confirmed sell signal there. So this could be that we're seeing the profit takers come in. Now on this chart you'll notice I've got the fib retracements, but they coincide quite consistently, don't they, with these sort of these old breakout levels and old supports. You got that old support at 1506, 1509 was that 38.2% fib level. You've also got a breakout level that we've broken today, actually 1540 area, which was that 1545 old resistance. So these levels are on this chart, they are coinciding with the support resistance on the price. Now this is the hourly chart, and you can see here again, I'll stick the crosshair in there. The old breakout became old resistance becomes supportive, 1506. Now that is your next level of support you need to hold, because that is your first key reaction low within the move higher. If you break below 1506, then I think we're going to be under pressure for a correction. You've got the hourly momentum indicators, which are far more corrective in their outlook. The RSI buzzing around 30, and the MACD lines sharply below neutral now. So I think this is more corrective now, and I think you're going to start to see possible rallies being sold into. If you see a little minor rally and it fails underneath that 1560 mark, which is that old support that we had on on Friday, if you see that coming in and now acting as a basis of resistance, I think that would be I think that would be a fairly reasonable sign that would suggest that you're going to get some further downside. So 1560 is the level that we need to watch out for, I think, initially as your resistance. But yeah, looking at these momentum indicators on the hourly chart, it looks like more configured towards selling or taking profits into any sort of rallies now, and certainly this big bear candle that we've got now, which has entirely retraced that big bull candle that we got on Thursday. It looks like the top has been seen for now. So I wish you good luck in your trading today, and certainly I think having broken below 23.6, you'd imagine 38.2% is the next level to reach. We've had a low at 15.18. Looks like 15.09 could well be on the cards at some stage. So I wish you good luck in your trading today, and I'll speak to you soon. Thank you.